And we're back. Hey, we just made 75% on this one.
I told you I was looking, man. I'm looking for the black one.
Good stuff.
Perfect.
Perfect. I'm gonna put it on the board.
Can help edit and know all that stuff.
Hello. I'm back.
Perfect.
Okay. Okay, it's leaving us. It's going.
Going to the moon.
Going to the moon.
Yeah. Okay. What is our percentage? 178. The one that was
What?
the one that we just bought. That was the picture that I sent you.
Oh, okay.
Yeah. So we're.
Perfect. It just went down. Should
You
I
wanna
plug in?
Maybe a little bit. Props. You bought it?
Yeah.
We're losing.
Yeah.
You're not sharing the screen with it.
Lost 6%.
Oh, you already closed it?
Yeah, I closed it already. 7.
6% of this. How much did we make?
70.
70, so we just lost 6%, so 64%? Or we
No,
are.
no, we lost that and we lost at 7%.
Oh, come on. No.
Yeah. Mm-hmm.
Oh, come
We can
on.
still, I mean,
Bro, enter now. Enter now.
what's up?
Enter now.
Pretty good. A little upset because this one I closed at 75% in profit, and then I entered over here again, like around here.
Bro, enter now.
Thinking it
Oh,
was
I
gonna
think.
go higher, and it didn't. So right now,
Is next though?
it depends. It depends on if it starts picking up over here. It's like the most random thing, but it was moving nice. How is your trading going?
It's okay. They're on base me. It's hard.
You're doing base better?
Yeah, but it's really slow today.
Mm-hmm.
It's really slow today.
Today is slow. What are your fees?
Things down.
Yeah, it depends. Like if you find something that's moving, dude, I entered so good over here. I could have sold,
Like you sold
Left.
50% they bought it again.
and then I bought again. That was my mistake.
They bought again so it's a little bit.
Mm-hmm. So I ended up losing,
Yeah,
and then it's gonna
this is only 7%.
yeah, it's small, but I was winning 75.
We were upset about this.
I'm upset about that. Yeah. Mm-hmm.
It's literally hard. Like you really just have like.
What is your fee over here? What fees do you use? 0012. Give me a second, guys. Just a second.
and sitting. Sad and sitting.
We'll find out. All right, I'm back.
Okay, bro, I think you can buy it like on that store that's going on again.
Right
Like,
here.
yeah. We need to make our money back though. This is a winner. Like,
So 0006 is
0.0001 is 2 cents.
oh 0001
that's a new one, bro.
new one. Wow. And do your orders execute always quick, or do they take a little longer to do?
Maybe once we can like
Oh, perfect. Oh, I entered late. We'll see.
Which one?
Oh, here.
Casino? I told you
Casino.
to.
No crying at the casino.
And the other one, did you enter again?
No.
Yes, you don't.
I didn't. Okay, first order executed.
Okay.
Yeah, I think volume is picking up again. Like we're getting new tokens coming out by minute, and this one is pumping.
Yeah, but let's do not overtrade. Like, let's find one and then trade a little bit.
Uh-huh. Want to buy again right now? Here we go. Look. Here we go, dude. Alright, here we go. It's gonna start hitting our stuff. Come on, keep pushing, guys. There, 47, 40. You're watching?
Yeah.
Skyler, come check this out. If you're not busy. This one is like in several different spots. And no,
Oh, you're up 30%.
yeah,
I mean, it's moving.
I was supposed to close it at 40 and plus, like 70. I'm gonna close half of it. Alright,
No crying in the casino. I think we see it.
Crying in the casino.
Let's set that.
It's because Elon Musk posted today some like a comment on Twitter. Really? It must be from the same tweet.
I don't know if it's good because it's a derivative.
Yeah, usually these are not, but it was pumping.
I mean, are you gonna stay? Oh, I don't want to affect it.
No, sometimes when they, I know you have to get out quick, but
Figuring out.
this one has been working out okay.
Yeah, sometimes that's the thing you never have. Sometimes there's something real.
Sometimes you don't expect it, yeah. Okay, I'm getting out now. Plus 12%. and put it on the board. Hold on. Like 40, but oh, what the hell, dude? Are you kidding me?
What happened? Right. See, that was a good one. NC Dollars is dead now. Don't even think about doing anything. Can you hear me? Yeah.
No, what do you say?
Like, everything is dead except casino.
Oh, okay, that's good. We're in casino.
Okay, okay. So we made money out of that, yeah, right?
Yeah, I closed it at 12%. It could have been more. I chickened out.
We
Me, bro.
See you later.
Sure, you say one of them.
All right, it's gonna touch our stop loss.
Okay, close casino.
We're gonna close at 6%, probably less. 5. Hey, it's something.
Yeah, yeah. There's nothing here, man. We got to wait, to slow down, and see what.
What do you think? Buy again?
We can risk it, but we were already one on that one, right? I don't think it's worth it to risk what we already won.
Okay.
Let's look for another one when it comes up.
All right. We're in this coin. Launder your money here. I'm telling you, if it's a good meme, it makes sense. Even if you lose, it's fun. But yeah, don't do that. Don't do that. Don't just lose money. You're trying to make money.
Okay.
Here we go. Green candle. Green, green, green. There you go. We're moving up.
So you bought it?
I already got before. Yeah. We're in. But we'll see if it keeps moving the same way. I'm thinking it will. We definitely are at an all-time high.
Yeah.
The family's gonna love this money laundering throughout Europe. Mamma mia! The family's gonna love this.
Laundering is awesome. Let's buy a yacht real quick and screw our people. Money laundering.
Can't wait for crypto to be fully legalized. New money laundering method, boys. Can't wait. Screw opium. Screw real estate. We laundering crypto to the West. Ni hao this shit. Screw opium. Screw real. Up on Solana, buy that LAR coin, clean that bitch up, get bread. The streets are eating.
Money laundering's the shit. Look at this ice, bro. Shit. Bro, money laundering.
I just laundered money and spent it on drugs. It's awesome.
That's the meme you bought.
I just laundered money and
Dollars, drugs.
Money laundering is awesome, ese.
Peso, dollars.
This stuff is crazy, yo. We don't even have to spin the block no more. This stuff's clean. You feel me? Man, this stuff.
Oh, would you look at that? Just cleaned another 50 racks. That's the third time this week. Thanks, money laundering.
Tumble protocol uses advanced mixing algorithm that turn your money clean like magic. This Tumble protocol
Laundering the profits through crypto.
It's really awesome, man. Laundering is awesome. Zero traces, maximum privacy, absolute deniability. Money laundering is
Looking to turn your dirty money clean? Introducing money laundering as a service. Looking to turn your dirty money clean? Introducing money laundering.
That was good. And we're going up, so we are laundering our money.
We're actually making.
killed it to 23.
Nothing new, bro. Are you still in the casino? Nothing new.
Nothing new.
Today was a slow day, but
Oh my god, dude, I regret this so much. It went up like crazy.
I'm trying to tell you, bro. What are you doing?
Here we go, here we go. Yes. Yes. You see how it's pumping?
Yeah.
What?
Damn.
What happened?
Sorry. It dropped. Like, yeah. Never mind. I lost. But it's okay, it's okay.
On what?
On these NC dollars, I left like $30 there.
Oh. You set up your fees like me? Like this?
Fees? Yes. The slippage, 10%, seriously. Yep.
There you go. Oh god, I'm getting out 20%.
Bro. No. No.
Oh god, again?
Yes. Yeah, I think we have to wait a little bit longer now.
Mm-hmm. we're down again. We're closing it. So we're down 21% in this thing. And, yeah, let's just stay out of it. Let's keep waiting for good coins to come out.
I actually did.
I'm putting them up on the board. Hold on. All right, guys, I'm leaving you all with a nice intermission here. We're gonna be live again soon, okay? And leave you guys with this video. From Plano.
If the major economies are starting to use BTC as a macro hedge and then not just gold, that means we've progressed way further than we ever thought we were going to have.
We'll talk soon.
Progressed in the last 10 years, and that happened all over the last 2 years. So BTC as a geopolitical asset, I think is really important. Why? Censorship resistant, borderless, neutral. Countries that have inflation risk or political instability, they're going to probably think about it. It might actually create more stability for their countries because it's a hedge. And then for the US, it's an edge.
What's going on, guys? Today we've got an excellent episode with Arjun Sethi. He is the co-CEO of Kraken and someone that I've known for a long time. He's a fantastic investor and someone who thinks very deeply about Bitcoin, crypto, and the traditional financial system. In this conversation, we cover what's going on at the intersection of traditional finance and crypto, why open, permissionless systems are going to be the default, how things like Bitcoin and tokenized stocks are going to fit into that system, what it means for individual professional traders, and also how regulation and the traditional players will all play into the system. Arjun understands where the world is going better than most people that I know. And today he lays out exactly how the infrastructure will get built and what it means for you sitting at home. So I hope you enjoy my latest conversation with Arjun Sethi. Arjun, I thought a great place to start the conversation is Robinhood is considered a traditional brokerage. They sell stocks, but now they've added crypto, fast-growing segment of their business. Kraken, you guys are traditionally a crypto business, but now you guys are adding U.S. equities. It feels like everything is just kind of converging in the middle. And whether you're an exchange or some other provider of a financial product, you're going to operate with a foot in the traditional world and a foot in the crypto world. Is that how you see this playing out? Or is there something else that we should be aware of?
Look, I think one of the areas that people kind of miss is like, what does the future of finance look like? And so during the 70s and 80s timeframe, you had Michael Milken talk about the democratization of finance and like the types of products that were built on top of it. And so the future of finance at the time was essentially U.S. world capital markets. If you think about what's happening now, is you're hearing these themes, and it's not just today. It's over the last 10 years we've been pushing these themes in the traditional venture Silicon Valley ecosystem. We used to say fintech, but it was like closed economy, closed system, closed experience. What we're really talking about here today, what I sort of profess more now than I used to, and you've been doing it for a long time as well, is like the future of finance really is going to be programmable, permissionless, and then much more increasingly decentralized. So great, those are all like great words to use, but what you're already seeing in what I call global liquidity markets is that you're seeing a shift from institutions being the gatekeepers to the protocols. And you're already seeing those gatekeepers of protocols being the rails. So crypto, and I also think that crypto no longer is becoming more and more commonplace, at least with folks like you and me or the folks that we talk to, given the multiple hats that we wear, where it's just an asset class, right? Like when you used to think about equities and crypto separately. You used to think about venture and private equity, public and private separately, which is fine. But I think when you think about crypto, it's not just an asset class; it's an infrastructure layer for global capital markets, global liquidity. I think the second piece to that is over the last 2 to 3 years, AI has started to automate a lot more of this, right? So now we can. You're no longer requiring armies of analysts or ops teams to think about what tokenization means, right? Like it's like right from the beginning, we can start thinking about how to value it, where does it get created, how do you distribute it, how it's owned, and so access from everything from treasuries to talent in some cases. But if I was to break it down into themes around what we're all talking about now, is that you have crypto as an infrastructure, AI and finance, DeFi and tokenization, open systems, which I think is really, really important, and then the hybrid trust model between traditional finance and what's happening in DeFi. So what does that really mean? Crypto infrastructure, trading, powering payment systems, identity, custody, credit, governance, AI and finance. What does that mean? Smarter, faster, leaner systems where one person can do multiple things from risk to research to customer experience. DeFi and tokenization. What does that really mean? Moving real world assets and functions on chain, right? So private credit, private equity, treasuries, traditional equities, public equities, open systems, composability and interoperability. I think that's been left out for so long, which is I don't need to be on a siloed platform. The platform doesn't have to own my customer experience. And then we can really start talking about what's been changing in the ecosystem around the hybrid trust models, which is regulatory clarity plus decentralized primitives, essentially will, and what I've sort of focused my day-to-day thought process on is that it becomes mainstream adoption.
When you look at how this infrastructure is changing, it does feel like the people have been very receptive to this. Obviously, things like Bitcoin, stablecoins, et cetera, they have been kind of first to use that. I think it's one of the first technologies, definitely in my lifetime and maybe in a long time, where the people adopted it before the institutions and the nation states and things like that. But now it does feel like the nation states are starting to turn and say, hey, wait, this like Bitcoin crypto thing, there's value there, right? And we saw this with the Bitcoin ETFs. Now you see it with like stable coins. You hear them talking about the fact that they want these people as customers, or they'll let them use their assets when they're lending and borrowing and things like that. But it still feels like they want to do things in their kind of gatekeeper centralized way. It's just like they look at the assets as like an input into that system. Whereas what you're talking about feels like an entirely new system that's like being built in parallel. Is that how you kind of see the two different worlds, kind of interacting with these assets?
Look, if you take a look at the internet and what happened there was a community in the way in which they thought about open protocols and open source. And there was a set of companies that said, okay, great, I'm going to take some of these open sources and create either closed communities or closed gate systems. Or I've already got a gated system. So like, how does the internet help me augment what that looks like? So you see that today. And by the way, I don't necessarily think it's a bad thing. It's just that we're evolving. And so traditional internet, we were evolving at a certain pace. I think what's great about like the future of finance and the crypto ecosystem is that we can work at a much more compounding rate, and we can do it much more segmented for where it makes the most sense. So when I think about, with my hat on for Kraken, is that, look, I think for how we think about the world is the end state for Kraken is to become a financial OS of the internet. And I know that sounds fun, crazy. But like you should be able to think about what is a global platform that powers everything from trading, custody, payments, identity, real world assets, and issuance look like, to not be gatekeepers, but to be able to enable innovation, right? Like AWS helped to enable a lot more innovation. They weren't gatekeeping along the way, as opposed to what, IBM used to do in the past. And another, a counter to that would be like, okay, well, Facebook isn't just a social network. In the beginning, at least, they were helping to enable what social networking could be with their social layer and identity, but they became much more closed ecosystem, and I would say it didn't come into fruition. So when I think about Kraken, it isn't just an exchange. If we're just an exchange, we're going to be a closed system. We're continuing to build the same infrastructure we built for ourselves to make Kraken successful, so that you can have an open, programmable financial system. I think that's really important, where it ends up being user-owned. That's a hybrid over a period of time, but then when you can think about being globally accessible and natively digital, that changes the way in which you can build products. And so then you're not building a platform, you're able to build products on top of an infrastructure, and then you can get a different kind of network effect or extensibility or user development ecosystems, which we haven't seen before, where the barrier of entry to build a product should be small. It shouldn't be that large. And you could say, hey, the history repeats itself and these moats are created. But ideally, we can get to a place where it's less and less moats, and it's more about, can you build products that are at an even level playing field for what's best for the customer at the end of the day. So you should be thinking about multi-asset, multi-rail. You should be thinking about not just owning the stack, but owning the experience for a customer, but still making it permissionless, which is, I want to be able to move. I want to be able to be mobile. I want to be able to own my asset the same way, which is probably what attracted you to Bitcoin or the Bitcoin paper, is that like, it's synonymous to cash in terms of like you owning it. It's yours. No one can touch it. And so that you don't have to think about a trade-off. You can think about, what can I do now with my collateral? And then what are the systems that I use? And of course, then you can move into, okay, well, what does traditional finance type products allow you to do that is trusted and compliant? And you're not thinking about trade-offs for compliance. You're thinking about advantages.
One of the things that I've heard people talk about that I think is pretty interesting is this like operating system for finance, and having it be this like open protocol that anyone can kind of play with and plug into, as you're describing here. We've seen this model, right? We've seen like the Apples of the world or the Androids, and some of them are more open than others. And there's all these kind of different ways to do it. But we've also seen with like the app stores. And so is that kind of what these financial institutions become, is like they've created their own app and they're plugging it into a system, but it doesn't matter if I've got, PayPal, Venmo, Kraken, or JP Morgan. I can go and I can send these assets between all these different products, whether I'm talking about currency, commodities, equities, or anything else.
Look, I think the beauty of the early internet was that there were so many open protocols that could have been used. And so we ended up choosing a few, and some were deemed illegal during the mid to late 90s, especially when it came to sending money over the internet. But I think your analogy is apt in that, look, why is Venmo and PayPal two separate systems? Like, why can't I use Venmo to send something to PayPal? You can't, even though they're owned by the same company today. Same thing with Cash App or any other protocol that's out there. And I would say, like, the beauty of what you've been able to see with crypto is like you have, across all these changes, that you start thinking about interoperability and composability. There is no reason. So the best analogy for kind of what it could look like is, think about email, which is like you're focused on one experience, and that experience helps you win the customer experience. And that allows you to be able to, chat with, Pomp at pomp.com and like Arjun at gmail.com or something like that, right? And we're allowed to be able to communicate with each other, even though we're on different platforms. And I think that protocol level composability is really important. So when you start thinking about the bigger ambition for financial assets, is even the vision of what we have at Kraken is like, okay, you got a single platform to access every financial asset, but you don't have to be closed there and homed there only, where you can only do things within what we do. That actually creates more friction. So when you think about crypto plus FX or treasuries or real world assets all in one place on one exchange, it shouldn't be, though, that like you cannot move it. And a lot of people say, well, I can move Fidelity to Bancard. That's really hard. You can move from Morgan Stanley to Bancard. It's very hard. Like, I've done it. And it's painful. And so that friction shouldn't be there in the case. So the bigger ambition for anyone, including what we think about, is how do you make access permissionless? That means moving beyond just like listing and custody, but you're able to move towards something creating more open, composable financial infrastructure architecture where anyone can build, trade, issue, settle without needing some sort of approval from a central authority. And central authority doesn't mean government. Central authority sometimes just means the bank, right? And I think that's what it means to being able to unify scale with decentralization.
Talk a little bit about you guys going into U.S. equities, because I think that there's a lot of people who realize, like, the traditional financial folks, of course, they want to have the crypto, ecosystem come to them. So you see the Bitcoin ETFs, you see different exchanges talking about maybe one day they could offer the crypto spot assets. We obviously have seen the futures and all that kind of stuff, come out. But I don't think people really ever thought about or saw that it was going to be early, where the crypto players were going to start adding the traditional assets and maybe beat the traditional players to kind of this merged world. I always use you guys as the example as a traditional crypto exchange now adding U.S. equities, like game on, it feels like. And so talk through maybe a little bit what you guys are doing and kind of why you're choosing to start with U.S. equities.
So this goes back a little bit in history where, look, when people talk about being internet native, mobile native, crypto native, AI native, well, I think what's really important is, like, when you are first principles native with a new paradigm shift, you're starting to build what you think the future may look like. But a lot of what the future may look like is coming from what I call past architecture, past traditions, and past assets. So given my background, I've spent so much time in fintech as an investor and built our own companies as well. And I started a bank in Mexico called Capital. One of the biggest issues with building those companies is because we're building on traditional infrastructure, it's actually harder and harder for us to be able to move and think about how to build new financial rails and financial technologies, because you've got this debt of all of this investments that you've made in the past. And so you'll see people talk about that, actually, which is like, well, we do this. It's like, it's cheap to be able to move money around. Great. It's for your own infrastructure. I think there was a quote by one of the founders of Airwallex where he said, like, I don't understand crypto. I don't understand why anyone would want to use it, because like my products and the infrastructure we built allows you to be able to move, money, instantaneously. Great. Well, if you use his fucking platform, right? So you got to pay the gatekeeper. The flip side of it is, okay, great. Well, we're a crypto native company. We built out the rails and the infrastructure. And so what does it mean to be able to go and get the traditional assets? Because they've already spent a lot of time building it, and rightfully so. Like, we bought NinjaTrader. The future of NinjaTrader is to be able to tokenize all of those contracts and to be able to token whatever the commodities are that people want to be able to trade, and how to think about that collateral. So our first foray into it is that, like, look, we support tokens and we support a lot of assets on our exchange, but we need to be able to support more than just crypto native assets. We need to be able to figure out how to make traditional assets crypto native in themselves. And so we announced tokenized stocks. We call them X stocks. And I think what we're really saying is that we're hinting at a world where you can trade any asset anytime from anywhere. And the real value isn't just faster access to equities. The value is collapsing the layers of friction. So what are those friction points? Custody, settlement, access, compliance, all abstracted into code, ideally. So for Kraken, it's a step forward in order to have a unified market structure where traditional and crypto assets can coexist, not just on one single platform, but across all the multiple platforms that are out there, right? When I say permissionless, you can use any other exchange. You can use any other service provider. You should be able to use any wallet. It doesn't have to sit with me, but we want to be able to help enable that. And so for the world, what does that mean? It's billions locked out of global markets traditionally. So that means they don't have that financial inclusion. And programmable ownership can be a reality. 24/7 liquidity in collateral can be a reality. And you have borderless access. So I think, yes, you need to get better at smarter compliance. Yes, you need to have next generation user experience, just like other fintechs have. But I just think making sure that you have access and composability, it's where you can start thinking about what XStocks or, we recently bought NinjaTrader. How do you plug that into DeFi and lending and structured products, et cetera? Like that becomes the real, in my opinion, Trojan horse for crypto native companies to start thinking about bringing traditional assets into a programmable finance world. Once they're on chain, we get to build more innovation on top of that, which is what is more exciting rather than thinking about the bridge that we're trying to build now.
How do you think about in this like open permissionless system? I think the critics with the ownership like, oh my God, they're all going to trade. No one's going to have any rules. There's not going to be any regulation. How are we going to stop the bad actors? Obviously, I think there's a whole critique of, does things like KYC actually stop the bad actors and all that? But just put that aside for a second. Like, how do you see what I would put as like innovative technology interacting with or intersecting with kind of one of the most regulated industries in the world in terms of traditional finance? Today's episode is brought to you by Citizenship. If you're a Bitcoiner thinking about global mobility and securing a true plan B, listen up. Portugal is one of the most attractive golden visa programs in the world, and Citizenship has built the ideal pathway to get you there. They're behind the first Bitcoin ecosystem golden visa fund. It's a private equity fund that purchases Bitcoin via a local company. That gives you exposure to Bitcoin while qualifying you for the golden visa and citizenship in just 5 years. Plus, here's what makes this a no-brainer. Citizenship has the lowest fee structure of any golden visa fund in Portugal. And because their team handles everything in-house, you skip the usual friction and bloated fundraising costs of other funds. So if you're serious about sovereign flexibility, now's the moment to act. Go to citizenship.com/pomp and book a free strategy call with their team. Again, that's citizenship.com/pomp. Go check them out today.
Look, when regulations were passed for any of these, they usually were for good reason. And then what happens is design to implementation ends up failing somewhere. So when you think about, okay, well, does KYC AML work? Yes, it works for a very specific set of industries of a movement of money, but it doesn't work for cash. It still doesn't work for, different nefarious activities, even in traditional banking. So I'll give you an example. You have someone like HSBC or any of the larger banks and institutions that they work with someone, when they find out that they've done something wrong, it's usually that they've been doing something wrong for 2 years, right? And you're talking about billions and billions of dollars being moved, and then now they have to go through an effort of reporting it, then doing more investigation, and obviously paying a fine eventually. If you take a look at the total, amount of fines that the large institutions pay because they took so long to figure it out, I mean, it's in the hundreds of billions worldwide. It's large. I can't even fathom what it is. I used to track it, but I stopped caring because it's just too large. What happens in crypto? One, you can start thinking about smarter compliance rather than an interpretation of compliance or manual compliance. So there's no reason why KYC and AML cannot move on chain, and you cannot enforce the rules programmatically, right? So you make it permissionless, but in order to redeem, in order to use in collateral for different products that are out there, you can enforce these programmatically, and it actually makes it easier, not harder. So imagine a world where you let in more people and then you can target rather than say, like, I'm just going to not let everyone participate in it. You're talking about billions of people left on the sidelines worldwide, which is what crypto is now supposed to help enable, because you're interpreting it manually, like, post World War II, where you need like an army of 1,000 people to figure it out. You don't need to. It's getting easier and easier to do this every single day. There's no reason why we need to, go back in time and say like, well, this is the way in which the structure needs to be created.
And when you see these assets that are being tokenized, there's like infrastructure and then there's the players. How do you see the issuers changing over time? Like obviously somebody's building a company, maybe they want a token and they want a publicly traded stock, or maybe that's just one thing. But like the issuer role, I think a lot of people don't really talk about, because they talk about like the technology provider on the crypto side, talk about the banking or, the exchange or whatever in the traditional world. But the issuer in a weird way has choice, and that choice should actually lead to competition between these two different systems to like who gets the issuer, right? It's like the next great company. Do they choose to tokenize themselves or go through the traditional public markets? I think right now the default is public markets, but like maybe that changes over time.
I think what's really fascinating is when you reduce the friction across the board, you're giving people ultimately more choice. And then when you have more choice, there's more innovation and products that are built on behalf of that. So who's the client at the end of the day? Let's call it, a company in Europe. Now, how do they get access to liquidity or global liquidity or access to capital? They got to go to their local exchange. Well, can you name me which exchange that they're going to go to in Europe? You can't anymore, because it's just getting smaller and smaller. So they want access to global liquidity. And so now everyone kind of looks to the US markets for global liquidity. Now, I think that can still be okay, which is okay, great. Now you've got a couple of exchanges that are thinking about global liquidity, but they all interact with each other too. So it ends up not being zero sum. And so as an issuer, you can decide how you want to think about your on-chain strategies, maybe a better way to put it, which is, do you want to be an issuer yourself? Do you want to work with someone else? Do you want access to a very specific set of global liquidity products? Is it a treasury? Is that credit? Is that funds focused on DeFi and TradFi? Is it like, I just want to issue a token that is my equity? And do I want to have access for global liquidity to be able to invest in my, traditional security? I think where people kind of get mixed up is that tokenization isn't about wrapping. It's about rewiring what the back end of global finance is going to look like. Now, is that going to happen today? It's going to happen tomorrow? It's going to happen like 10 years later? That's hard to predict, but it's already starting to make moves in that direction. So I just think it becomes more and more natural where you're giving choice to the issuer. And now the question ends up being, who is the issuer? Is it the company? Or is it like the broker? Or is it the exchange? Like, how's that infrastructure going to come into place? And so when you have this mishmash now between what I call programmable on-chain structure and traditional private contracts, that's where more and more innovation is going to happen, right? So we're already pushing this to try to figure out what does that look like. But it's going to be different in every market, and it's why I think when you see the macro realignment, then you're going to see what are the types of products that you can have in there. And look, the fact that Bitcoin and Ethereum are basically the natural liquidity pipeline for everyone to come in, and then the stable coins is the next piece of those global liquidity rails, we're just going to be able to be much more unified, in my opinion, like in the financial layer and the connective tissue. And I think that's where crypto is best served versus where we are today in a fragmented world with all of these middlemen and friction points across the board. I'm not saying anything of these things are bad. It's kind of where we are today.
I think that there's a very good lesson in Circle and in Tether. It seems like Tether's strategy is to go to the emerging markets, and they're like, hey, the US already has dollars. Like, we're going to go try to onboard a bunch of other people. Circle is saying, hey, we're going to be a regulated US-based stablecoin. We're going to go get distribution through the Coinbases and other exchanges in the world. And we want to bring this digital dollar to kind of regulated finance, et cetera. I don't think either strategy is right or wrong. I think they're just very different strategies. When I think of things like tokenized stocks and maybe other things of a degree of sophistication, it feels like the demand is probably already most existent inside the United States or kind of traditional Western capital markets. But to your point, you mentioned earlier, there's billions of people who it's outside of the system and probably would love to get access. How do you think about, which market to attack or like what is the sequence? Because you probably can't serve everybody all at once because they're kind of different users with different product needs.
Yeah. So there's multiple questions in that, so I'll try to tackle it one by one. Look, I think maybe a good way to put it is the world is merging, multi-asset and multi-collateral based markets. And so we're watching the conversion of traditional finance and crypto in real time. We just talked about it. And so you have BTC, ETH, stablecoins, tokenized treasuries, and equities. They all can and have been serving collateral across a set of integrated financial systems. And so what do we really care about at the end of the day? We care about market stability. We care about price. We care about utility. What assets can you borrow against? How do you settle with? How do you embed, right? Frankly, into smart contracts? That's how we think about in crypto. And then what's the shift of store of value, which is what we've been used to infrastructure of value. And I think that ends up being probably more important around what we want to be able to build. I think Circle and Tether and all these other guys play a very specific piece of it, right? Which is, okay, well, what does that plumbing allow you to do? Is that a wrapper or not? Right? Obviously, there's always been the great debates around algorithmic versus, being backed one-to-one, depending on what that is. I think you go back to the basics. What is tokenization as an infrastructure? Again, not a wrapper. It's a re-architecture of financial plumbing. It removes friction. Again, custody, settlement, compliance, issuance. That's kind of what Stripe did for payments, right? And I think that's what we can do for worldwide capital markets. Real innovation isn't the tokens. It's going to be the rails that continue to run on. So think instant settlement, again, 24/7, programmable ownership, global access. This becomes like the default. This isn't the default in Argentina. This isn't the default in Brazil. It isn't the default in most of Latin America. It's not the default in India. It's not the default in most of the emerging markets, or even the markets that we're just starting to think of. Like in Africa, when you think about global capital markets, you're only thinking about a couple places. You're thinking about Nigeria, Kenya, and South Africa, and a couple places I'm probably missing. There's still a billion people that are being not attributed. And so what do they want access to? It goes back to what I just mentioned, is that tokenization isn't a wrapper. It's like a re-architecture of the financial plumbing. And so what do they want access to? So they want access to clear assets where they can have savings and yield. So going back to your question around Circle's a solid company, right? What they've been building, I kind of think of it as a small to medium mid-market and enterprise. And Circle within the US had been focused on the upper stack of mid-market and enterprise, it's important for those set of folks that want to think about bridging the gap between what they do in traditional finance. Think Franklin Templeton, think BlackRock, those folks, which is very different from what I'd consider like a Stripe or a Tether or a Visa, right? Like really early on, which is like, okay, small to medium mid-market, and how do you grow bottoms up at and think about how to realize performance for who their customers might be. I think the thing that I found most fascinating, because I travel the world a lot, is like, look, you go to Latin America and you go to their version of the farmer's market. It's not as cool as it is here in like the Bay Area, but when you're going to where people are buying things daily, they are priced in USDT, right? They're not priced in their local currency. They're priced in USDT, and USDT is buying US treasuries. The natural form of what you're going to do if you're buying, selling, storing, and saving in USDT is thinking about investing in USDT. And then,
okay, I'm back. Here, we got some news. Unfortunately, we are not going to be streaming on X, YouTube, and Twitch anymore. We're sticking to Kick, and we're gonna have multiple channels for all of us to stream on there, and apparently that's where the audience is at, and they're offering us an exclusivity deal. So yeah, this is I'm gonna close this recording out. This stream is gonna be over in a few seconds. Thank you for watching, and it's been fun. We'll talk later. Are you still there? I think you're gone. Hello. Yeah. Okay. So we're good to go. Peace.